It's January 23rd, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but those of us that know. Michael Saylor has been playing chess while everybody else is just playing checkers. It's great to be on the MSTR train, especially because we know there's only one stop for this train, and that is higher. Not today, not tomorrow, not next week per se, but over time. It's inevitable. If you don't believe in this thesis, then this probably is not for you. Because Michael Saylor, what is he doing right now? He is thinking about buying more Bitcoin. And something tells me that Michael Saylor is always thinking about buying more Bitcoin. And I just love how this, came out yesterday. It already has 1.2 million views. And Strategy Maxi says, I also think about buying more MSTR. I'm going to actually heart that and do a little ditto in the moments. And then Hermé says, thinking about buying more oil, John Rockefeller in 1895. And Adam Livingston says, scarcity motivates me to do the same. Chomp them all up, because we know sale is coming for all the Bitcoin. Let's go. So Saylor's thinking about buying more Bitcoin. We'll know on Sunday what kind of dot we're looking at. Is it a green dot? Is it an orange dot? Is it no dot at all? Only time will tell, but I can tell you that Michael Saylor's thinking about buying more Bitcoin. We have CJ Bitcoin in the house, says, the only thing better than Bitcoin is more Bitcoin. Let's go. Absolutely. And then we have Adrian that says, MSTR, Saylor does two things. One, buys Bitcoin and increases strategy company holdings. Two, thinks about buying even more Bitcoin to increase strategy company holdings. Michael Saylor is laser focused. That's one of the biggest takeaways I had from his most recent interview on what Bitcoin did. He has laser focus. He's not thinking about doing 10 different things. He's looking for what are the best ways that I can add more Bitcoin to the strategy treasury. That's what I want to do as Michael Saylor. How do I do that? I'm laser focused. And he knows that means having specifically Stretch with all his preferreds, but specifically Stretch, which is the iPhone moments, absolutely dominate. That's why I'm calling it right now. I think Stretch in 7 days, give or take, maybe like 8 or 9 days, depending on when they announce it, is going to announce an increase to 11.25%. I think Michael Saylor is not messing around. He doesn't like the fact that it's taken even this long to get back to par. He wants to be ATMing Stretch yesterday, today, tomorrow. He has not been able to because it's been hanging around 99.6, 99.7, 99.5. He wants this thing pegged at $100 so that he's having to sell every single day. He's having to ATM shares every single day so he can buy more Bitcoin. He's not messing around. Excuse me. I think a lot of people have been saying, well, 11% just sounds like a nice round number. Whatever. Who cares about round numbers? He wants a number that keeps Stretch at 100. I'm sure he'll let it dip a little bit after the ex-dividend date, like it did, down to like 99.2, especially when that was coordinated with a Bitcoin drop. But he wants that thing back at 100 within a couple days. Period. End of story. That's my belief. That's my thought. And so he's going to raise it to 11.25%. That is my guess. We'll see if I'm right. We'll see if I'm wrong. Drop a note in the comments if you think I'm wrong, if you think I'm right, if you think he's going to go up to 11.5. Because guess what? He went from 9% to 10% in one fell swoop. And then he's been going up 0.25% since then. So, hey, he might just want to get it over with and just say, let's just go to 11.5%. I mean, I'm actually saying just go to 12. Let's just get to 12% and just call it a day. No more messing around. Because at the end of the day, if you think Bitcoin's CAGR, which Michael Saylor does, which I do, is going to be 30% minimum a year, years that it will be more than that, well, then is the difference between 11.25% and 12%, is that 0.75% really that big of a deal? I mean, it's real money over time, but what's real money over time is all this time that's being wasted right now by not being able to ATM Stretch because it's not at 100. I know that it grinds Michael Saylor's gears when Stretch is not at 100. He wants to get it there, so I'm making the call. 11.25. That's where I think he's going to raise it to. I'd love to see him raise it higher, but I think my guess is 11.25. Let's move on. Rohan says, Bitcoin's problem isn't demand, it's voltage. Bitcoin is a nuclear reactor. If you plug its raw, unmanaged volatility directly into a pension fund, you blow the fuse. In 1788, steam engines had the same issue. They were powerful, but they spun too fast, overheated, and sometimes exploded. A man named James Watt solved it with the centrifugal governor, a simple mechanical brain to dampen the intensity. The valve would auto-adjust to keep the engine running at the perfect speed. It turned explosive energy into usable power. STRC is the centrifugal governor for Bitcoin. The valve works in two ways. If the price drops below 100, they can raise the dividend higher. If the price rips above 100, they can use the ATM to issue shares and cap the upside volatility. The result is a boring anchor near 100 with double-digit dividends powered by the most beautifully violent asset on earth. And by the way, I'll add double-digit dividends that are tax-deferred as well. Saylor engineered a way for the fixed income market to capture the heat without the sun getting of the sun without getting burned. This asset is only going to get more attention. As you can see, Stretch is growing. The trading volume is flying. Let's go. So it's a good analogy for sure, Rohan. Keep them coming. James says, MSTR's net leverage has now dropped to 9%. Preferreds are now greater than converts. $2.2 billion of a USD reserve. Credit rating higher. Volatility dampening. Guess what? This means it's working. It is working. Now it's just time to sit back, relax, and let this machine work because it's going to compound over time. And then when you combine that with an inevitable future Bitcoin run, we don't know when it's going to happen, but it's going to happen, then we'll see this in real motion. Chris says, Bitcoin is the hurdle rate for saving. MSTR is a hurdle rate for investing. Stretch is the hurdle rate for income. And I have all three. All of my bases are covered. Next, I have a great clip from Fong Li you're not going to want to miss. Then our sponsors, then an awesome video clip from Michael Saylor as he brings down the house. Let's go.
Strategy continuing its Bitcoin buying spree, acquiring $2.1 billion worth of the cryptocurrency last week. This as the company's shares have fallen by nearly 60% in the last year. Joining me now, Fong Li, Strategy CEO and President. Fong, it's great to talk to you again. Thanks for joining us.
Thanks for having me. Appreciate it.
So why'd you guys keep buying and why buy in a larger amount than you had been recently, especially as effectively your currency, that is your shares, have been going down?
Yeah, look, 2026 is going to be a big year for Bitcoin. It's going to be a big year for MSTR. And as a result, the best thing you can do as you go into a big year is to start to build a strong capital base. And that's what we've done really over the course of the last few years, but we accelerated the last 2 weeks. The other big thing about 2026 is it's going to be the coming out party for Stretch, which is our preferred equity. We launched it in the middle of last year. It's grown up to be over $3 billion this year. And we think building a strong capital base with Bitcoin, a strong US dollar base, all those things are going to bode well for what's going to happen with Stretch over the course of 2026.
When you want more for your business, start with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Your business identity is more than your logo or website. It's everything that defines who you are and how you operate, from what your customers see to what they don't, like operating agreements, meeting minutes, and compliance paperwork. With Northwest, you'll get more for your business, more privacy, more guidance, and more free resources than you'll find anywhere else. For nearly 30 years, Northwest Registered Agent has helped entrepreneurs form, grow, and protect their businesses. They're the largest registered agent and LLC service in America, powered by over 1,500 corporate guides, real people who know the local laws. It can help you every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest in it over time as you do any other retirement account. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get into. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
If you create digital money, not only do you take all the bank deposits, you take all the treasury credit, you take all the repos, you take all the short-dated instruments. But if you look at everyone that bought junk bonds, corporate bonds, mortgage-backed securities, 5-year bonds, 10-year bonds, sovereign debt, municipal bonds, why did they not just put their money in a money market? The answer is they were reaching for yield or a tax advantage, right? How big is that? $300 trillion, maybe more. Okay. How much of that capital would simply go to a bank account that paid, by the way, all that capital blended in dollars yields 5%. All of it. And what do? You take on duration risk and you take on credit risk to get to 5%. If you don't want that, you're ripped back to 3% or 2% or whatever the number is. So I offer a bank and I offer you 7%. How much of the 300 trillion would go to that? No duration risk, no credit risk.
All of it.
All of it. All of it. Okay. Now here's the issue. How do you create digital money? Well, to create digital money, you need to take digital credit, blend it with a little bit of currency so you have a liquidity buffer, maybe put on a reserve on top of it for a volatility buffer. Then you need to get a regulatory stamp of approval, right? You need a banking regulator to say you can offer the account, or you need a securities regulator to say, okay, you can offer this as an ETF. Or you can offer that, or you can offer this as a private fund, or you need a digital assets regulator to say you can offer this as a digital stablecoin. Okay. So you put the regulatory stamp on it, you put the buffer on it, you do some active management for redemption. People want daily redemptions and they want it to hold stable NAV. And so we can't necessarily do that. Like, I can't give you a regulated bank account in the UAE because, Mike, are you going to start a bank in the UAE? No, like I can't. Why would I do that? Right? They can do that. Am I going to start a bank to compete with Morgan Stanley? Well, I think like in 1860, right? Morgan Stanley got started. They were financing the Civil War. Okay. Right. And so the point is, why do I want to compete with JP Morgan or Morgan Stanley? I don't want to. I don't want to compete with Fab or Emirates Bank or Barclays Bank. I don't need to.
Yeah.
Right. Because if you want to create digital money, you need digital credit, STRC. Okay. How many banks are there in the world?
Thousands.
Tens of thousands. There's 5,000 banks in the US. Must be tens of thousands of banks. So there's no shortage of banks with sales forces and good relationships with regulators, right? There's a bank in Japan that gets along well with, the Japanese regulators. Do I want to go to Japan and start the world's biggest bank in Japan? Of course not. Do I want to start the world's biggest bank in Germany? Of course not. Do I want to be Deutsche Bank? Do I want to be, the biggest bank in Switzerland? Of course not. So there's no point in competing with the banking business. The idea is digital money. What's the second best? There is no second best.